Well, for a closer look at those jobless claims numbers that just came out, as we'd mentioned, pretty much in line with expectations at 469,000. We've got Ethan Harris. He's the head of economics for North America at Bank of America Merrill Lynch. And Ethan, good to have you back with us. Looking at the numbers in line with estimates, did you expect any type of miss, though, because of this snowstorm factor?
I mean, we had a lot of snowstorms in February, and my aching back can testify to that. And they have heavily distorted a lot of the numbers. Today's data could have easily been a lot higher or a lot lower. It was kind of luck of the draw that we actually came right in at the consensus. And the same thing's true for Friday's payrolls. There's a very wide range of potential numbers on Friday. So we need to kind of take these numbers with a grain of salt.
I mean, that's right. Are they going to be tossed out numbers then?
Yeah, so I think the right way to look at things is let's try to focus on data for the month that's less distorted by the snowstorm. So let's look at survey numbers like the Monster.com or the Challenger survey or the Purchasing Manager surveys. These are survey measures that tend to be much less affected by the weather. If you look at the general tone of the surveys coming out of February, the month looks okay. The economy's on track in its recovery.
Right.
Obviously, those data normally are less reliable than payroll data, but this month they're actually worth more attention.
Right, they may not have that noise of the snow in there then. And do those numbers and like the Monster survey and things of that sort, I mean, do they tell you then that we are in a recovery phase in jobs or that we're just pretty much flat right now?
Well, I think right now we're in this kind of limbo state where it's not clear whether job growth has started yet. I mean, for example, with claims data, normally you'd wait for them to go below 450. That would be a signal that you're really in the job recovery, and we've kind of hesitated above the 450 level. I think as we go ahead into March and we kind of get past the snow distortions, we will see the claims data come down into the below 450, and we'll start to see the beginnings of a real job recovery.
Led by private hiring.
Yeah, I think there's no area of the economy where people are bulled up and are going to be aggressively hiring. But a lot of companies during the recession and the early stages of the recovery overreacted, fired a lot of people, really fired more than they needed to. As we saw with today's tremendously strong productivity statistics, they've been over-firing their workers. So we're expecting a broad-based kind of rehiring of some of those laid-off workers.
Okay. Ethan, Mike McKee was just pointing out to me that the unit labor cost went down significantly, down to almost down by 6%. What is that going to mean then for corporate profit when the GDP numbers come out later?
Well, I mean, the corporate profits are getting a very strong boost from productivity, and we're going to continue to see pretty strong productivity profit gains off of these numbers. I think as we move forward, the profit gains will come more from growth in the economy and less from massively aggressive cost cutting. But that's what the recent data have been. They've been massive cost cutting driving profits.
Okay, Ethan, good to talk with you. Thanks so much. Ethan Harris at Bank of America Merrill Lynch.